Good evening, good evening. If you can hear me okay, do me a huge favor. Give me a thumbs up if you can hear me okay. Today we are going to talk about different types of whole life insurance. A lot of people are confused. So we're going to talk about whole life today. Hopefully I can answer some questions that people have had for quite a while. If you have any questions regarding whole life insurance, please do me a huge favor, put that in the comment box. I'll be sure to answer those questions for you. Today we are going to talk about 5 types of whole life insurance. There's there's many more than 5 types. So we're going to talk about the 5 types that are the most common and that we commonly hear about. And give me a couple of minutes. I'm sharing with some friends. Do me a huge favor and do the same. Share and like, share and like. Don't be stingy. Don't be stingy. Share the information with someone. I'm sharing on my end here. I'm asking that you do the same. We're going to get started in about 30 seconds. Get started in about 30 seconds. It would be so much easier if Facebook would just have the invite all friends button. It would be a lot simpler to do, but of course they don't. All right, so good evening, Facebook. Hello there, Margot and Sassy Souls and Layla and Miss Karen. Good evening, everyone. As you know, I'm that night owl. So this is when I do a lot of my work. So I appreciate you all being here with me. I see I got more night owls, so I can appreciate that. Everybody else is going to have to catch it on the replay. So today we are going to talk about whole life insurance. We're going to talk about 5 types of whole life insurance. We're going to set the record straight. A lot of people ask a lot about that 2-year waiting period, which I really don't know where they got the 2-year waiting period idea from, but we're going to talk about it today. We're going to get that cleared up. Hopefully I can help you guys really understand what that 2-year thing is, because there's 2-year things. And we're going to clear that up so you guys can be a lot more informed when it comes down to insurance and what type of insurance that you can and cannot qualify for. So first and foremost, let's talk about what whole life insurance is. Of course, I've touched on it several times before, but now that we're talking about whole life, let's just jump right on in. So whole life is what's called permanent insurance. We talked about term insurance the other day, and term insurance, of course, is insurance that is set for a term. After the term is over, it expires. So, hey, Tawana Douglas, long time no see. So term insurance is insurance that is set for a term and then it expires. Whole life, on the other hand, is called permanent insurance because it is set in stone. It's permanent. It doesn't change. As long as you pay the premium, they will continue protecting you. Give me a quick moment, please. I want to turn my phone off just in case it rings on. You know, you got to have it of getting interrupted. But so permanent insurance, it is permanent. It doesn't cancel out. It covers you throughout your lifetime. Now, some insurance companies cover you to 80 years. Some cover you to 95, some cover to 100, and some even longer than that. And there's no set age there's no set in stone age, right? insurance has what's called actuaries, and they make a determination of the mortality rate. Not mortality, I'm sorry, the mortality rate. And they determine what the life expectancy is and things like that. So there are some insurance companies that will cover you through age 80. So you definitely want to make sure you look at your policy so you know how long your policy is covering you. And then there are some policies that cover you to 95. Most companies right now are between 95 to 100. The company that I represent, we cover you to age 121, and there are a few others that are out there. A lot of people say, you know, they look very quizzical when I say 121, but I mean, think about it. Every now and then you will turn on the news and someone is celebrating a 100th birthday. Then, you know, depending on where they're located in some other countries, there's people, you know, celebrating 105, 110, you know, so 121, although we have not yet seen it in our lifetime, does not mean that it is impossible. So we want to make certain that we cover you for whatever comes up. So we're making certain that we're covering you 100%, period. We're going to make sure that your life is indeed covered and your family, your income, and your assets are protected. So that's what permanent insurance is. Permanent whole life insurance is also a level premium insurance. The price doesn't go up, the price doesn't go down. Whatever you pay, whatever you agree to at the time that you sign that policy is what that policy is going to be from that point forward. It's not going to change on you. So no matter whether you have a 10-year premium payout, a 20-year payout, or, you know, a continuous payout, whatever it is, if your bill is $50.78 today, it's going to be $50.78 5 years from now, 15 years from now, so on and so forth. It's not going to change. You don't have to worry about it changing the same way the term insurance changes. Okay, so that's two most important parts about whole life insurance is that it's permanent protection, it's pure protection, and then there's a level premium. Also, whole life insurance has a cash value attached to it. Now, let me just clear up something real quickly about cash value, because, you know, when you listen to some of the financial gurus, people like Suze Orman and Dave Ramsey and things like that, you know, Susie Orman and I think that's her name, Susie Orman and Dave Ramsey, you know, they always say a lot of negative things about cash value life insurance. And, you know, I'm not mad at them, because when you represent a certain company or you represent something, you're going to stand steadfast. You're going to, you know, stick to it. You're not going to be movable on that. So, I mean, if I said that, you know, I believe in, you know, white fuzzy hats, you know, that's it. That's all. You can't change my mind on it. No matter how you feel about it, that's my belief, right? And so people who talk negatively about cash value, they're talking negatively about it because they have an opinion of what they believe is right and wrong. That doesn't mean that their opinion is correct. It's just that they have an opinion about what's right or wrong. So let me just get some, you know, make some things clear today about cash value life insurance so you can be more informed. So a lot of the financial gurus will say that cash value life insurance, you know, they'll say, well, why put money into cash value life insurance? Because when you die, you can't take the cash value, although you've been paying into the, you know, this investment, and you should be able to take it. Well, I want to clear that up real quick. So first and foremost, when you're paying premiums to a cash value life insurance, you are not paying money into an investment. You're paying money into a life insurance policy. If it were an investment, it would be taxable once the death benefit is cashed out. That's number one. So it's not an investment. You're not paying into an investment. Now, let me give you a quick example to kind of help you understand what cash value is. So let's say, for instance, you won some tickets to a movie or a concert or something. You paid nothing for those tickets, but it's going to be on their retail value or valued at, let's say, $125 or valued at $30 or valued at $65, whatever that dollar amount is, but you didn't pay for any of it, but you have a ticket in hand. Cash value insurance is kind of like that. So what happens is that the cash value represents the amount of money that you've paid into your death benefit, and that they will allow you to borrow against. So let's say you've paid into your cash value insurance $5,000. They may say, okay, you have a cash value of $4,000, meaning they'll allow you to borrow up to $4,000, but that's not your money you're borrowing. That's not your money sitting in cash value. It's just saying that the $5,000 that you've already paid is valued at $4,000. Now, it would be valued at $4,000. Again, we'll just use an example. It would be valued at $4,000 versus $5,000 because in everything you purchase, there's some type of administrative fees attached to it. So there's pulling out the administrative cost for the life of that policy first. That's why most policies do not have a cash value associated with the first 2, 3, 4 years, because it's paying off the administrative portion first. Once the administrative portion is paid, then you start to see the accumulation of the cash value. And the cash value only says that this is what you've paid into is worth. It's not your money. It's not something that you're investing into, because life insurance cannot be an investment. If it were an investment, you would get a tax document for that, and you will be charged interest. And you don't, because it's cash free, it's credit free, and it's probate free. So we can just debunk that myth about cash value being life insurance, cash value being what you're investing into. And we can debunk that myth about, when they always say, well, why would you pay for something if you can't get both? No, you can't get both. If someone gave you a free ticket, they're going to give you a ticket that's valued at $120. They're not going to give you the $120 and the $120 ticket. That's stupid. They're going to give you the ticket that's valued at the $120. It's what the ticket is worth. It's not that you've paid for it, and they're not going to pay you for it. You're going to get the ticket. That's how the life insurance is. Cash value says your death benefit at this point, what you've paid into it, is valued at this amount if in the event you canceled out your policy. So we got that over. I hope everybody understood that, because this is a question that I get all the time. And a lot of people who are against whole life, this is the argument they have, because they don't understand the concept, and they're listening to financial gurus who either don't understand or refuse to understand because they want to, sound important. But again, they have their opinion. Hey, Mr. Dressmaker, how are you? Hi, Larry Johnson, Melanie Walker, thanks for joining me. So let's go ahead and get into the 5 types of life insurance that everyone needs to know about. So let's talk about traditional whole life. So traditional whole life insurance is usually fully underwritten. Fully underwritten means that they're going to check a few things before they qualify. They're going to ask you a whole gamut of health questions. They're going to ask whether or not you've had a felony. They're going to ask if you've ever been diagnosed with different diseases: heart attack, cancer, stroke, diabetic, kidney disease. Are you on dialysis? Do you have lupus? They're going to ask you a whole slew of questions about your medical background. They're going to also ask you, have you ever been diagnosed with HIV or AIDS? They're going to ask you, have you ever been treated for alcoholism or drug use? Have you used recreational drugs? Do you smoke cigarettes? They're going to ask these types of questions. Have you been in a nursing home? Are you confined to a wheelchair? Do you have mobility issues? And the reason they're asking all of this is so that they can make a fair determination of whether or not you're high risk, or whether or not they feel that you qualify enough for them to say, okay, we'll take on this risk. We'll go ahead and sell them this life insurance, and we don't mind taking on the risk. Fully underwritten life insurance is actually, in most cases, a lot less expensive than some others, because when you answer the questions, they have more information to go on. There's no question marks. They're able to order a doctor's statement. They're able to ask for blood and urine. They're able to ask for blood pressure and EKGs and different things like that. So they're giving it a full, once over. They're giving it a full check to see Okay, where does this person fall in? And the price of that type of insurance most times is least expensive than any of the others. Okay, but for some odd reason, when the insurance agent come around and we start asking questions, people are like, well, I don't want to answer that. Well, you should, because to answer to get you a discount. We're not trying to be nosy. Nobody cares if you got heart issues or whatever. We don't care about that. That's your personal business. We don't care. We're not gonna ding you for pre-existing conditions unless your pre-existing conditions are multiplied. So let's say, for instance, here's a good example. I had a client once who she had cancer. She had stomach cancer, but she was also a smoker. She was denied. I mean, come on. It makes sense, her being denied. You already have cancer, but you're still smoking, which is said, cigarettes smoking causes cancer. I don't know how true that is. I used to be a smoker for several years. I don't know how true it is. Not my place to figure it out. But the bottom line is, if you know that that's what scientists are saying, and you have cancer, not that she used to have cancer, she has cancer, and you're smoking, you just added one issue on top of another. And cancer is considered one of the higher risk issues. So now you've added cancer on top of it. So no, at that point, you're just considered too high of a risk. If we give you insurance today, you might be, you might die on us tomorrow, and then we've just taken $100 premium for you, but we're going to drop $50,000 on your family. I don't know. Hopefully some of you understand the odds here. No one wants to give, you're not going to tell somebody, okay, let's play dice or let's play cards or, whatever, let's chase cars. And, if the odds aren't against you, if the odds are against you, you're not going to take that bet. And so insurance companies are the same way. Well, we're not going to insure someone who has cancer and deliberately still smoking and only take $100 a month from you, and you think we don't give you $50,000 on the back end when the chances of you dying is like absolutely possibly tomorrow. That just makes no sense, right? But a lot of people, for whatever reason, are very fearful or very adamant about not giving that medical background. However, let me share this with you. No matter how much you don't want to give that information, there's this thing called the MIB. It's the Medical Information Bureau. Every time your doctor puts information into that computer, some of that information gets sent to the Medical Information Bureau. So we're going to find out anyway. So it really doesn't matter. It's just like a credit report, but for your medical history. So, you can tell somebody, oh, I got perfect credit. They run your credit, like, oh my God, their credit sucks. It's the same thing with insurance. You say, oh, I'm in perfect health. They do a background check, a health background check, and then they come back like, oh my God, this person has like 50 different ailments. No, we can't do that. And they'll come back, and sometimes they'll question you, okay, well, you told us you didn't have any, high blood pressure, but according to this, you're taking high blood pressure pills, because they also run a prescription drug check. So people try to be slick, hoping to get a lower rate, and what they do is really mess themselves up. Now, let me tell you something. When it comes down to insurance agents, we are your friends. Trust and believe that. We are your friends. We are what's called field underwriters. So the more truthful you are with us, the more able we can direct you to the right products that we know you will not get declined on. It may cost a little more money, but you'd rather have us know all of the information and work it out for you than to get it to the underwriters. They find out something and then they completely decline you. Because once you're declined, you're going to be declined straight across the board. So the next company you go to, they'll be able to pull that information up in the MIB, and they'll say, oh my goodness, this person was declined by that company on this date. So now you may be completely blackballed for, let's say, maybe 2-3 years before you can reapply. And even at that time, they may still want to know, okay, whatever issues were blackballing you back in the day, what's happening now? What's changed? Okay, so be very mindful of that. Be very mindful of that. It pays to be honest, because we're gonna find out the information anyway. A lot of people say, well, they declined me because of pre-existing conditions. No, not necessarily. It could have been more than one pre-existing condition, or you could have just not been very truthful on your application and they did not want to accept that. So it's not always that there was a pre-existing condition. There's always something else included with that. And here's why. So you have your fully underwritten insurance. It's the one that asks the very most questions. It's going to get down deep into your medical history. They may ask for a doctor's records and things of that nature, and they're going to make a determination as to what you do qualify for and at what level. It's usually the least expensive. Then you have a simplified insurance. Simplified insurance is not fully underwritten. They're not going to ask about smoking. These insurance policies are sometimes the ones that you find come in the mail, right? But you can get them, you know, we sell them. I market those insurance policies, and there's nothing wrong with it. It's insurance, you know, but they're usually capped at a maximum of $30,000 for the death benefit versus, you know, the capability of getting 100,000. It's only like limited to 30,000. And it's simplified, so it's not going to ask you any health questions or anything like that. It's not going to ask whether or not you're a smoker. I'm sorry, it does ask medical questions, but it's like only 2 or 3. And they're, you know, they're asking things like alcoholism, drug usage, HIV/AIDS, and then hospitalization, pretty much. A couple of things, COPD, stuff like that, depending upon the company. But for the most part, it's a simplified issue policy, doesn't ask many questions. And because it doesn't ask many questions, the price tends to be a little higher. It's a little more expensive, and it's more expensive because since you didn't ask answer more detailed questions, we're not doing blood and urine, we're not doing a complete health check and things like that. It's assumed that there's something in there, because if it wasn't something in there, you would have given us a fully underwritten. So they're going to charge you a little more money for that. So the bottom line here is the more questions you answer, the least expensive the policy. But if you choose not to answer any questions, I got a policy for you. That policy is called a simplified issue policy. Okay. Next, we have a graded policy. A graded policy is, excuse me, this is where this 2-year thing come in. So a lot of people will ask, you know, well, I want to make sure that my policy starts right away. I don't want to have to wait 2 years. All insurance policies start right away. Let me just get that out now. Every policy starts right away. The minute it is approved, it starts right away. 2 years come in with a graded policy. Your policy is kind of prorated. So what that means is that, let's say you have a $10,000 policy. The first year it's prorated. So as if you were to pass away in the first year, instead of you getting $10,000, your family would get all of the premiums that you've paid plus 10%. Okay, all of the premiums you would have paid for the year plus 10%. If you passed away in the second year of the policy, you'll get all of the premiums you would have paid in 2 years plus 20%. So what's happening here is that they're saying, okay, you know what, we'll insure this person, but their risk is a little more, their health is a little more risky. So we want to just kind of keep an eye on it, see if they're healthy enough to really kind of hold on. Give us 2 years and then we'll see. Year 3 comes around and like, you know what, hey, they've maintained it, we're good. We're going to go ahead and grant that full 10,000. And so that's what happens. And so people who have graded policies, they're not on graded policies because they're unpunished. They're on graded policies because they have health issues. And it's not the insurance company's fault that the policy is graded. When you're older or you're not taking good care of yourself and you have health issues and you're not getting insurance when you're younger, when you're healthier, you may run the risk of a graded policy. People who have graded policies are generally individuals who have severe asthma, individuals who are diabetic and they're taking insulin, large sums of insulin at that, individuals who currently have cancer, because we do take people with cancer, we just have to put them on a different type of policy. After that policy, after that cancer has cleared up, been in remission for, I think, 2-3 years or so, then we can transfer them to a different type of policy. But initially, while they're undergoing treatment, they are on a graded policy. So a graded policy is not a, it's not a punishment. It's for individuals who have some severe health issues that we need to, well, not severe, but some health issues that are somewhat risky. And we want to make certain that we can maintain their life for a period of time before they get transferred to a different type of policy. And that transfer is not automatic. You're going to have to contact your insurance company and say, well, hey, I have been in remission X amount of years. I'd like to see if I can get this rate lower. And I'm going to tell you, what a lot of people don't understand is that with life insurance, your rate is not set in stone. It's not set in stone. It can be adjusted for certain things. So for instance, I was a smoker for several years, and I mean several years, right? And so when I quit smoking, it's been now, I think 5 years. I don't know, I forgot, I lost count. But when I quit smoking and I let a few years pass, maybe about 2 years pass, I went to my insurance company. I said, look, I'm not a smoker anymore. I haven't smoked in I don't know how long, and here's my doctor's information, right? They did the research. They checked the MIB. They found that, yes, not only am I a non-smoker, but I went through my doctor to become a non-smoker. He monitored that process till I became a non-smoker. And because there was proof that I was no longer a smoker, they reduced my insurance. So my insurance went from $111 a month down to $83 a month. So a lot of people don't understand or don't know that you can get your insurance coverage, your insurance premiums reduced when certain things change, okay? So I'm gonna be talking about that in May. I have a webinar coming up that's going to talk about saving strategies, different ways that you can save. So if you're interested in that, I can't remember the website. I can't remember the web address for that, but I'll definitely be talking about some of these saving strategies that are very uncommon that people aren't aware of, and that's one of them, that you can get your life insurance premiums readjusted based upon certain health changes, and one of those health changes is smoking. So if you got an insurance policy years ago and you were a smoker, now you're no longer a smoker, you haven't been a smoker for a couple of years or whatever, and you want to see if you can save a few dollars, call the insurance company and say, listen, I'm no longer a smoker, and I want to see if you can give me a better rate. Can you give me a non-smoking rate? And chances are they can, so, but you got to ask, closed mouth don't get fed, so you got to ask. So that's your graded policy. The next policy you need to know about is a guaranteed issue. I'm sure, quite a few, I know in the Midwest, a lot of people have heard of Colonial Penn. I don't know how popular Colonial Penn is in some other states, but that Colonial Penn insurance, as well as some other, is considered a guaranteed issue. Guaranteed issue means that there's no medical questions. There's absolutely nothing in the world possible that can stop you from getting insurance. It's going to get issued, period. Just by your signature or your smile, it's going to get issued. Now, here's why. Because it's guaranteed issue. As simple as that. Now, with the guaranteed issue life insurance, it is also a graded policy. It is going to go through that 3-year period, so to speak, before you get a full coverage on it. But it is guaranteed issue, no questions asked or anything like that, no health checks. But because there are no questions asked, remember I stated earlier that the more questions you answer, the less expensive the policy is. So because a guaranteed issue asks no questions, it's going to be the most expensive. So anybody who's interested in Colonial Penn, just because they don't want to answer any medical questions, understand you're putting yourself in a position to be out of pocket even more money. Your best bet is to go the fully underwritten, allow your doctors to send in documentation. You may find out that your health is not as bad as you thought it was, and that it's not declinable, nor is it, extensive enough to require a price increase. So you might want to go ahead and just do the fully underwritten, unless you know without a shadow of a doubt that your health is so poor that nothing else is going to pass, nothing else is going to be approved for you. So then you may want to go ahead with the guaranteed issue. That way you can bypass those health questions. And that would be somebody like somebody who is very close to terminal, multiple health issues. The person has heart issues and cancer and diabetes, COPD, congestive heart failure, things like that. Things that are serious in nature generally has a guaranteed issue policy, whereas it's automatically accepted. But because there's no medical questions involved, that pricing is quite steep. And so you might want to just reevaluate that, weigh the odds before you go with a guaranteed issue. See if you can get qualified with a fully underwritten policy first. Allow them to research your medical background. If you get declined under the fully underwritten, then double back and do the guaranteed issue. But take the opportunity and do the fully underwritten first, and let the doctors and the underwriters make a determination as to whether or not your health is as great as a risk as you think it is before you make that decision to do a guaranteed issue rate. Hey, Elizabeth and Tracy and Robbie Johnson and Chad and Karen, hello, you guys. Appreciate you stopping by. So we're coming close to the end here. So that last one we want to talk about is single premium. And here's a policy that I really, really like, that a lot of people aren't aware of. So a lot of times when I talk with people, I call people up on the phone and they'll say, oh, I'm straight. I don't need no insurance. My insurance is straight. And you try to explain some things to them that will bring them some benefit, and they just completely close you off. They don't want to talk to you or anything. And that's really sad because, insurance people, we're salesmen. That's what they call us. But to be perfectly honest, we come to educate and we come to give you the best benefit for you. So a single premium life insurance is highly beneficial in two instances. Number one, you have a large sum of money that you can dump into an insurance policy, which will give you immediate full death benefits. So let's say you got $20,000, you drop it into a single premium whole life policy. $20,000 may give you $30,000, $35,000, $40,000 worth of coverage instantly because you've already paid the $20,000 flat out. And you don't have to ever worry about another premium ever again in life, right? You're covered to the day you die. The second situation where single premium insurance works very well is for individuals who have policies at $25,000, $50,000, $100,000, $150,000, and they're still paying on it, and they've had those policies for 10, 20, 25 years. They've been paying it for a while. Let's sit down. Let's take a look at what you have accumulated in cash value. Let's see what's accumulated in that cash value, because chances are we can transfer that cash value over to a single premium policy and you never have to pay another premium ever again. So here's the odds. You either continue to pay that premium until the day you die, or you roll over what you already have into a single premium policy. Now, your face value may be a little less than what you had. Let's say you have $50,000 of life insurance. Let's say you have $30,000 of cash value built up, and you're putting in $50, $60 a month. Why continue to pay that premium? Drop that cash value of $30,000 into a single premium. You may get $40,000, $45,000. You might get $60,000 insurance. You just don't know. But drop that cash value into a single premium policy. The least you've done is save $60 a month, right? Now you can use that, somewhere else. You can put that on the cable bill. You can put that on something different. You can put that into, a savings program. So you can maybe leave behind a little something for your family. There's a ton of things that you can use that money for. But if you go ahead and allow an insurance agent or financial planner to sit down with you and explain to you all of these really cool things that can be done, and all of these products out here that were built in order to make your life better and make your retirement better, and to ease some burden off of you, I mean, why not do it? Allow them to come in, sit down with you, cross the kitchen table, explain these concepts to you, and you may be better for it. But instead, we get a lot of resistance at the door. We get a lot of resistance on the phone, and a lot of people want to just completely turn their backs on us because they think that we're going to try to sell them something. You know, they're going to treat us like, you know, we're Girl Scouts or something. I don't know. Who knows? But you know, it's not that at all. So be mindful that when insurance company, you know, reaches out to you, you know, if you got the time available, sit down with them. You may be better off, especially if you're no longer in communication with the insurance agent that you initially had, right? If you haven't seen or heard from your insurance agent or your insurance company for the last 5-10 years, you need to sit down with someone else. You really do. Number one, you need to get rid of the company that you had because they don't value your business. And then secondly, if they don't care about your future or your product that you've purchased from their company, you need to go ahead and sit down with somebody who is going to care and answer all the questions that you have, because 10 years ago when you purchased that policy, your needs didn't change. Things are different. So you really need to reevaluate that policy and reevaluate that relationship that you're having with that insurance company, because clearly they're taking your money, but they're not interested in loyalty or your business. They're just taking the money. Because if they cared about your loyalty or you being, you know, helping them succeed, then they would do what they have to do to make sure that you're always put in the right position. So make sure you talk to, you know, if you've got life insurance, you know, I don't know. Hey, Holly. Hi, Renee. I don't know, you know, how many people on here who actually has life insurance. But for those of you who do have life insurance, take a moment out this weekend. Pull your policies out. Take a look at them. Take a very good look at them. You want to take a look at the face value. Take a look at how much cash value has accumulated. Take a look at how long you have to pay this policy. And most of all, take a look and see how long that policy is covering you. Is it covering you to age 70? Is it covering you to age 80? Is it covering you to age 100 or beyond? Whereas the company I market, we cover you to age 121. Take a look at these things and jot down some questions. Contact the customer service or the agent on that policy. Ask some questions. Ask some real good questions. Like, hey, you know, how much, at what percent is my cash value accumulated, right? You don't get to take it, but if you ever needed to borrow, you need to know how much is, you know, gonna be in there, how much you can actually borrow against, right? So you want to ask these questions. You want to find out from, if you're a smoker, you want to find out from them, can you get a reduction in cost if you've been a non-smoker now for 2-3 years, right? You know, for those just joining, I used to be a smoker. I used to pay maybe about $111 for my life insurance. I had quite a bit of life insurance. And I quit smoking after about 3 years. I contacted my insurance company. I said, listen, you know, I'm a non-smoker. I need a reduction in premium. They dropped it down to $83. And that's something that, not, you know, most people don't know that can be done. You can always contact your insurance company and let them know when a change has happened, when a good change has happened. You don't want to go in there and say, look, I got cancer now. You know, don't be crazy. Don't do nothing crazy. But if it's going to benefit you, call an insurance company, see where you can save a few dollars, and then turn around and pivot that money, take that money and reposition it somewhere else. Put that money into maybe an investment vehicle, put that money into an annuity, into a mutual fund or something like that, that can build up interest or begin to create an emergency fund for you so that you can be protected in other ways. So with that being said, you know, I hope this information was helpful to somebody. I pray that somebody was able to gain something from it. As always, you can always put a comment in the comment box, ask me any questions. I'll be sure to respond back to them. Please do so in the comment box, because I would like for everyone to be able to see the questions as well as the comments, because someone else may have the same question and was just afraid to ask, or didn't really know how to formulate the question in order to make, for it to make sense. So make sure you put those comments there. Real quick housekeeping. Again, if you're not aware, my book, The Budget Blueprint, will be out June 25th. It's slated for June 25th. I believe the pre-sale will be May 15th, I think. The pre-sale May 15th, that's The Budget Blueprint. It's going to be an ebook. For those of you who have been with me on, as I've been talking about insurance topics for the last couple of weeks, I will be providing, I got an email list, I got a mailing list, you guys. If you're interested, if the information that I've shared with you, you found value in it, let me know, send me some hearts, send me some thumbs up. I have some other information that I love to share with you, some other financial topics, some things about budgeting, some stuff about saving strategies, things about how to protect your income, and I mean, just so much more. Finance and accounting and business, those are my things there. That's my go-tos. And I'm very well educated in it, and I've worked in those arenas for 25 years plus. So if you're interested in getting on the email list to get informed of those webinars and e-courses and books and things like that, that's happening real soon, do me a huge favor, go to bit.ly/finance topics, bit.ly/finance topics. Subscribe to that email list. I'll make sure that I get that information out to you and keep you informed of what's happening. And for those who sign up for that email list, will also get a free download of 31 ways to level up your bank account. You get a free download of 31 ways to level up your bank account. That download is not currently available now, but if you sign up for the email, I will have your email information. I will send out a blast to everyone once that is completed and uploaded, and it will be sent out to you automatically. So again, that's bit.ly/finance topics if you're interested in the email list, so that you can be kept updated, because not everything I talk about is going to be done in Facebook. Some things are going to be in a webinar. Some things is going to be, in some private spaces where, other people can go, and then the Budget Blueprint, available June 25th. Pre-sale will be May 15th. And go ahead and subscribe at bit.ly/finance topics for your free download of 31 ways to level up your bank account. That's the wrap. I hope I was able to help somebody. I hope you guys, feel a little more educated when it comes down to insurance and things like that. We do have a couple more topics to go over. Next time, I think we are going to talk about, I don't know what we're going to talk about, but there's a couple of more insurance things that a lot of people, ask me about, and so we're going to talk about that. Well, we'll talk about that next time. So one of those things, earlier I said that there's two issues that people complain about constantly. They ask me about that 2-year rule, or they'll call it that 2-year thing. And they don't exactly know what that thing is, but they always mention it. Most times you're talking about the graded policy, which I did talk about already, but then also that other 2-year thing is called the contestability period, the incontestability period. And what that is that for the first 2 years of the policy, if you were to pass away in the first 2 years of the policy, the insurance company has the right to order an autopsy or a report on how you passed away. They have the right to find out what was the cause of death. besides the death certificate, because what they're doing is trying to see if there is any way they cannot pay you. And for instance, you know, a lot of times people will say, well, no, I'm not a smoker, because they know smokers' rate are more expensive. So they'll say, no, I'm not a smoker. And then they die within 2 years. The insurance company is going to research. So now they go in there and research, and you got, you know, charred lungs, you know, and your doctor's record says that you've been a smoker for 30 years. They're going to pay your family back the premium. They're not going to pay them the death benefit. They're going to pay the premium because the application was granted due to fraud, right? Because you lied on your application. So now they're not going to grant you the full death benefit. They're going to only give you back the premiums that were paid. And some companies, I think, give it back with interest. Some does not, right? They'll just give you back your premiums that were paid and call it even. So in the first 2 years, they have the right to do that. If it's the 25th month and you said you had cancer, I mean, you said you know, you're not a smoker and you died of cancer and it was due to smoking or whatever, they have to give you the death benefit because it's month 25 and they missed out. You held on a month longer. But if it's within that 2 year period, the incontestability period, they can do a check. So they can ding you for every lie that they find, and then your family does not get the death benefit. They get only what you paid in premium. So a lot of times people will say, well, you know, my mother or my father, they had life insurance and the life insurance company didn't pay out. Well, it's not that the life insurance didn't pay out. There was something that happened. There was something that was found out in the 2 year period, whereas it no longer qualified you for that application. And it was like as if that policy was null and void. So again, if you got any questions, feel free to put them in the comments. Contact me at any time. You can contact me here on Facebook, Instagram, and Twitter. Check me out, bit.ly/finance topics for that email subscription list and the free download of 31 ways to level up your bank accounts. And with that being said, that's the wrap. You guys have a good evening. Be safe. Take care.